What are you expecting from Netflix?
Yeah, good morning, Brian. Thanks for having me again. It's going to be an interesting one tonight. And, sentiment has deteriorated significantly with shares down almost $200 from the Squid Game euphoria, which seems like an eternity ago. Not only given the broader NASDAQ market weakness that you're talking about, but investors are increasingly worried about a subscriber miss here and a guide down tonight. So it's going to be an interesting setup. I think folks are generally looking for about 13 million cumulative paid net ads across December and March, versus consensus at about 14.5 million. So expectations are certainly coming down, which is obviously a positive setup for the stock, and all eyes are certainly going to be on the price increase, which they just put forth in North America and North America last week by about 11%.
Wasn't that a good thing in kind of a weird way, Jared? I mean, I loved it. If you expect your kid to get a C- on a test, they come in with a C+, and you're actually sort of happy about it.
Yeah, no, it's so we have expectations that are coming lower, and then we've got this price increase that's going through. So I think there are two things to think about. There's one thing where they're delivering so much more value than they have in the past, right? If you take a look at, this is the first price increase going back since 2020. It's the sixth price increase since 2014, right? So they're delivering more value. They're giving us an incredible slate. You look at the slate that's coming out, or that just came out in the December quarter. It's the most robust that it's ever been. And you've got upcoming Stranger Things and multiple more launches. On the other hand, you want to certainly think about just the potential churn and the fact that it's such a competitive landscape across broader OTT offerings. I'm sure you see it in your house, across Disney, across Hulu. So when you think about just how much they need to spend for all of this content combined with the competitive landscape, it's certainly a good two-way argument.
And Netflix has some amazing content, but none of what you're saying should be new to our viewers. I mean, I know you and others have talked about this for years, Jared. Okay, we've got Peacock, ours. We've got Hulu. We've got 1,000 different apps or channels, whatever you want to call them. Whenever you plug in your Apple TV or your Roku, they're all there. They're all competing for the best content, for the best talent. Why now suddenly is this, well, they may be spending too much on content theme coming home to roost? They've been spending too much on content for years. They've never had a dime of earnings, have they?
No, and I think that's fair, but it's now coming to the point where we really haven't been having to deal with this concept of missing paid net ads in the context of a content inflection that is so significant. So when you start seeing, they've gotten the pass over the years because everyone's been focused on the growth of the company and everyone's been focused on the beats and raises on paid net ads. But when you have the combination of disappointing paid net ads, the concept of saturation starts to take over, and that's certainly not a narrative that you want for a growth company. On the other hand, let's also be balanced. The stock is now approaching 20 times next year EBITDA, so valuation is certainly becoming much more palatable. And Netflix historically really has never had that valuation backdrop, so you're certainly getting compensated from a valuation perspective, whereas you have not in the past.
Will they make money this quarter, or last quarter, I should say, Jared?
I think all eyes are on 2022. So they're actually about to inflect here pretty significantly, Brian. They're going to be about break even for calendar 21 from a free cash flow perspective. Consensus is sitting at about $1.5 billion for free cash flow next year, and folks certainly think that's doable. So that's when you get into that trade-off where perhaps growth is slowing, but free cash flow is set to inflect.